DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
You said it. You finally said it.
I'm so bullish.
Andy's bullish. I'm bullish. We're bullish. We're going to the top. We're on 4th floor today. We're going to be on floor 1, and then we're headed straight to the moon, boys.
Ladies and gentlemen, boys and girls, we are liberated again. Tariffs are back. Oh, wait, no, they're not. Yes, they are. No, they're not. There's no more tariffs, but the U.S. is making a strong push into Greenland. All the fun is happening at Davos, but you're here watching the Rollup, and we're glad that you are because we're having some fun here too. I saw Trump give a speech. I saw him cracking on Canada. I saw him coming after all of the Scandinavian nations, all of the European nations. He met with the leader of NATO, which, if we're putting our geopolitical hats on, doesn't it benefit everyone that the U.S. has a stronger influence in the region so that they can continue to build out? They're responsible. None of the European nations are responsible for security of the region. The U.S. is the strong man of NATO. It makes sense for them to come more into the region and support the entire region by building this Arctic dome that's going to defend against all the missiles China and Russia are going to throw towards Europe and the rest of the West. I don't know, but if I'm a European country, why do I care about Greenland? I haven't used it for national security yet. I might as well let America have. And does America really need all of Greenland? I bet this ends up looking like America gets like a piece of Greenland. We put a military base on it. We build out this Arctic dome infrastructure. We shoot down missiles, and the Greenland people become rich because we pay them. Denmark can tax us or tariff us or whatever they need to do to get their piece of the deal. America doesn't need all of it. They just need a piece of Greenland to advance the security of not just America as a nation, of the entire West and NATO as an entire alliance. I think it benefits the Europeans and the Americans to share Greenland. But this is not a political show. This is a show about neo-finance, and we're going to be talking about FHE. We're going to be talking about stable coins, and we're going to be talking about how all of this shakes out, because there's been a lot. Obviously, Greenland's been in the news. A lot is happening in Davos, all the World Economic Forum.
Can you hear me okay?
And the powers that be are discussing the state of the world economic order. I think it's quite interesting, actually. Ray Dalio went on CNBC. I was watching this segment just a few hours ago, and he's talking about how fiat currencies are no longer a thing. This is something that, as Bitcoiners and crypto people, we knew for some time, but it's interesting to now see the legacy financial elite to accept that the fiat economic order is collapsing right before our eyes. And we can see this by central banks not investing into bonds, the bond market. If you see what's happening in Japan, this is falling apart. This is having spillover effects
I
into
said
the
guys
US
skin, yeah.
economy. We're going to be
We
talking more
have the
about
same
that.
first name.
And then obviously what's happening in Greenland and tariffs being put into the EU are now rescinded. That is not going to be happening. So I think it was a combination of effect. It was a multitude of factors that caused this most recent drawdown. Because if you looked, there was a lot of bullish sentiment that happened before this most
No, I
recent
don't have a
drawdown.
hat for
Everyone's flying, oh, we're in a
Is that a
bear
must?
market. That was a bear market rally, a dead cat bounce. We're going lower. We're going to 65K. I don't know. I continue to think that, look, this is a pretty good time to just accumulate in the chop and stay extremely patient. Maybe we go a little lower, maybe we bounce around a little bit higher. But to me, it doesn't seem as if we're going to go dramatically in one direction,
Okay.
in some short time frame. I tend to think we're going to chop a little bit longer. We're going to form out this
Yeah.
bottom. And
Okay.
then I really don't think that we're going to get too much lower, because if you do look at the recent rally in gold, a lot of the same reasons gold is rallying, the same reasons I believe
Okay,
Bitcoin
let
will
me
rally
do
very
that
soon. And then
now.
obviously the wealth effect will take hold and spread throughout crypto as
Then
an
I can also
industry.
close
Ray
like
Dalio was saying how central banks are pretty
other
much
apps
caught
that are
off
running
guard.
in the
They're
background.
offsides. They don't own enough gold, and they've been over leveraged and over invested into fiat currencies and bonds for too long. The economic and world order is sort of shifting. These tectonic
Sure.
plates are changing. So they're reallocating away from bonds into something that is a lot more independent from central banks. Even if a central bank has its independence, gold and Bitcoin are much, much more independent than any fiat currency. And I anticipate we're going to continue to go in that trend. So personally, think gold still has some room, and I think Bitcoin has still a lot of room as it catches up and then supersedes what we're seeing happen in sovereign hard assets like gold and silver. So that's a little bit in the neo finance world. We've got some news in terms of tokenized gold and other tokenized offerings, because ultimately blockchain is removed from all of this. It's a better technology. And we believe that a lot of these asset classes, not the fiat asset classes, those are dead and gone. We believe that the sovereign hard assets, where the central banks are going, where people that are smart and recognize the debasement trade, they see the potential of hard assets. We believe these are coming on chain, and the asset classes around these, like the money market funds and the rest of the neo finance landscape, is moving on chain. That is going to have spillover effects into the blockchains, the L1s, these tokens, as adoption and activity on these chains increases. This is just raw fundamentals: more activity, more fees, more revenue. Ultimately, we believe that these token models are going to be corrected as they start to resemble companies with a proper treasury management. These tokens are poised to do well as they figure out the activity and the adoption grows. So that's my rant on the state of affairs. Before we have our first guest join us and we discuss the privacy sector of FHE, obviously Zama's auction is now live. Suggest everyone gets involved, because it is one of the more rigorous and robust privacy projects that's out there. So let's get into some news. Let's bring it up on the screen. And Leo, we're going to fly through this, so feel free to go rather quickly as we cycle through here. Let's do a quick standby before we get our first headline up. Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on-chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on-chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
All right, we are back, guys, and we are here with Guy and Guy. We're gonna say Guy I and Guy Z from Phoenix, and we're talking privacy, which has been a super hot topic as of late. We actually had Zama's founder Rand on. They're running an auction right now. They're doing great work in the privacy space. Of course, we've seen Monero, we've seen Zcash, and we've seen the resurgence of privacy as a concept really take hold of people and get very, very exciting. You guys are working on FHE as well. And so I'm curious, as you guys see this resurgence in privacy, man, just tell us how it feels, working on a privacy protocol. And of course, guys, welcome back to the show.
Thank you, Robbie. It's good to be here. Honestly, we've been taken by surprise by the recent surge in privacy. Like we've been talking about it for many years. We've been working on it for many years. Obviously, we're big believers in that, but it's always been something of like a feature that people put in the back burner, like an issue that we will deal with like sometime in the future. And it's very interesting and even again surprising how this is becoming top of mind for so many people now.
Yeah. And Guy, I mean, give us an update on how things have developed over recent months, because I think both of you guys were on the show a couple years ago. Obviously, a lot of this was still in the research phase, right? It wasn't even research and development. It was still, we had to fundamentally understand some of the math and science at the core levels of this cryptography. What has been the developments in the FHE space up until recently, and how has Phoenix, scaled in recent months?
Yeah, of course. So I think you're spot on that there's been a good amount of interest happening around privacy in the last couple of months. Our journey, when we started Phoenix, it was about 2.5 years ago. We actually started Phoenix as an L2. That was the original premise. We thought that that's the right path, but very quickly we came to the realization that what people need is the ability to get privacy where they're at, and not so much try to force them to move to another chain or build something which is privacy first versus privacy as a service. So around late 2024, early 2025, we shifted into the coprocessor architecture, which you can think about it as privacy as a service, that now taps very nicely to EVM chains and enables developers in that space with a few lines of code to now start introducing privacy into their smart contract. Our product specifically runs on like a couple of chains, but I think the main objective here is to make it as seamless as possible from a developer standpoint, and also from the user experience. We can talk about that later on, but make the integration very, very smooth. Because if you're assuming that the developers would need to understand FHE and understand cryptography and understand the nitty gritty, I think you're losing the battle already before you start. Yeah. So as I said, a coprocessor, very easy to use SDK, and then of course you have the lower tier, which is to make sure that the privacy solution works. Yeah, I'll continue. There was a little bit of background noise. To make that the privacy solution works for multiple guarantees. A, that there is no trust in unnecessary components, like trusting the hardware, that the FHE performance are as fast as they should. And I think there is a lot of progression that happened in that space in the last couple of months. Happy to give a bit more about it in a minute.
For anyone who's unfamiliar, give us a bit of a background on how you plan on taking this to market, because again, I think a lot of people were familiar with it while it was still in research and development. They're not ready, or they don't fully comprehend how this is tangible, how they're ready to see this application into the market. What are some of the integrations that you guys have now, and how do you see this complementing the market and filling any gaps that are currently exist? I've probably for you as well.
Yeah. So you're 100% correct that people do see privacy as something which was maybe still in research phase, and as we start coming and saying, hey, but it's actually ready now and you can deploy it now, the realization together with the level of interest start to come into this funnel of projects that are actually now going live. So we have projects that are building on us that are doing confidential payments, confidential stablecoin, protecting against MEV resistance. If I have to summarize it, I would say it's the first thing is to understand usages that need privacy, that has a vetted interest in privacy. A lot of what we're seeing these days is more around the payment and stablecoin space, and then bringing an offering which makes it very easy to deploy. So as an example, our SDK, which is going to come in like 2 weeks, will now offer the ability for stablecoin issuers to very natively issue a stablecoin that supports a private and public mode. So once you have that stablecoin, you can flip between a private and a public mode. You can use it as a public stablecoin for everything that you need. But if you now want to transfer it to somebody else very quickly, switch it into a private mode, transition it, or hold it with everything on chain as private and shielded, and then have the way to continue using it if you want to change it back and forth. So that is an example of where there is a clear value, but it's also very easy to deploy, and users and developers can actually understand that quite quickly.
The open question to both of you guys. What do you say to the people that still have the belief, hey, crypto's for drug dealers and scammers, this is private. Like, why do we need privacy? This is just anonymous technology that for the criminals, it's going to help them do what they're doing. Like, how do you help people overcome some of this rhetoric?
I simply sent them the POC we did with JP Morgan about a year ago, where it was like their requirement. They were saying the opposite. They were actually coming and saying we need more privacy. Like, we don't need just confidentiality. We need anonymity. We need all of that. Obviously, there's a requirement for compliance as well from these organizations, but they literally are saying like we cannot come on chain unless we can protect our own customers' privacy the same way we do it off chain. So that's, to me, that is like the best proof that we need this to actually cross the chasm and not just be like in this crypto land, and actually get the masses and the institutionals into what we've been building for so many years.
Yeah. And what do they tell you? So they currently have a privacy landscape and confidentiality with customer deposits, and as they're circulating their own internal, customer funds. Give us a deeper sense of as much as you can share. Don't, we don't want to put you guys in trouble with JP Morgan, but like
Sure.
help us understand more about the use case that banks and financial institutions are looking at when they're looking at private stablecoins.
It's not just private stablecoins. Like, it's like, for example, with JP Morgan, it was, and this is public, so I think I can talk about it. It's stablecoin is a part of it, but it's really about tokenizing everything. So they have very illiquid funds that are very, very hard to tokenize, especially in more like traditional market rails. It would be so much easier if they can just take something like a real estate fund or a private equity fund and just say, hey, we get the approvals to issue that. Where do we issue that? We just put it as a smart contract on chain, and bam, it's done. And then through JP Morgan system, a client can click to invest in that tokenized fund, and that's it. But I mean, this is great. Obviously, that's a new offering, that's a new revenue source for JP Morgan. But at the same time, JP Morgan is like, no, I cannot now. Like, they have liability if their own customers' information, for example, when a customer is investing in that tokenized fund and those are publicly available, and whenever they try to change a position, that is something that everyone in the world can see. I mean, that just sounds ridiculous to someone like JP Morgan, because lack of a better term, their own clients can probably sue them for not like following their own privacy protections law that we have in the United States. So it's really as simple as that.
Yeah, it makes sense. Anything to add, Guy?
Yeah, we did a very extensive a product market fit research about 6 months ago, and the outcome of that product market fit was that there is a lot of interest on the confidentiality aspect of it, but for institutional, less about the anonymity. And as time progressed, we actually learned that it actually shifting. And if up until recently we thought that most of the institutional care about hiding the content of the transaction, but not necessarily who does the transaction, we're now actually seeing that there is also a demand for anonymity, but it's all gated under the assumption that there is a compliance aspect to that. The goal is not to hide the identity to avoid tax or anything like that. It's really about getting the benefit from both sides. So to have the KYC, to have the anti-money laundering, anything that's required around that part, but also have the ability to do a KYT, to know the transactions under certain conditions while maintaining full privacy and full anonymity. And how do you do it? Because it sounds like you're asking, hey, I want to be protected, but I actually want to be compliant. And I think this is where the underlying cryptography that we're using, FHE, shines when you compare it to other alternatives. And this is really where we're building the product towards.
About FHE extensively on the show, how it differs from ZK, and how, with FHE you can prove the computations without necessarily revealing some of the internal components. And so I think this is extremely powerful as you're talking to banks and financial institutions that have come to know and expect the privacy because it's been off chain. There hasn't been any means for someone to publicly view all the transactions in the ledger. This is something that comes out of blockchain, and it's a feature and a bug depending on the use case. And so we can kind of protect against that when it is available on chain. But there are other teams that are developing FHE. So I'm curious, how you guys fit into this landscape and into the privacy landscape in general. Like I mentioned, Zama, the other day, and their auction is using a lot of this FHE underneath the hood. So, have you guys worked together in the past? What is your take on some of the other privacy institutions and the other players in this landscape? How do you fit, with the rest of the players in this market?
That's a loaded question. Let me unpack it first, and then I think it'd be worth it to get your perspective too. So, first of all, there are different layers of this. So, on the front end, we are put in a lot of time, like doing like market research. We actually have like this internal red team model where you have the infrastructure development team building the product, and then we have the application teams, um, and then we have the applications team, which is basically trying to build next door applications on the infrastructure. And then what happens is that they kind of fight each other, right? Like the application team is saying the user experience is not good enough. We need those features, we need those improvements so that we can develop a better developer experience for the outside. And this model has been working very, very well. And in general, I think really that our developer experience when it comes to privacy on chain is unparalleled. Like, I don't think there is any team that gets even close to what we're offering, though this is evolving very fast. But I'm really proud of like what we're doing there. And then more on the back end, so some thing that people don't know about is about a month ago we announced this new FHE scheme. So we're building a completely new FHE scheme from scratch. It has a lot of benefits, but the bottom line is that we think this could be the FHE scheme that gets us to Visa scale. So think like 10,000 transactions a second encrypted, and you can do that like as easily with like just a few GPUs. So that's something that we have the research out and we're currently actively developing, and obviously expect to hear much more about that. But if people want to search that, then it's called DBFV. There's some information online you can see, especially if you're technical right now.
Yeah, and maybe just to add on top of that, and if I take it maybe a bit on an upper level, first of all, there is always this discussion between FHE and TEEs. And I think the attacks that happened around TEEs towards last year really demonstrated the vulnerabilities of TEEs and drove even more interest and awareness around the FHE space. So for us, there's always this question like, should I develop using a TEE or should I develop an FHE? And I think now it becomes very clear that if you really want something that has strong security guarantees and zero trust on hardware, FHE is the way to go. And then the next question is, okay, but is FHE ready? Is it still like in research phase? And the short answer is it's definitely ready. So it's ready for all the use cases that we described before, and you can see products being built on top of FHE-based infrastructure. So if we want to break down the FHE ecosystem, so yes, there are definitely several companies that are working, Zama, who are doing a really good job, Phoenix, and a few others. And now it's the question, okay, how do we bring the most value out of it? And the developer experience is clearly one that is highly important if we want to make it, again, as seamless as possible for the developers. And then there is the lower tier, which is let's now all of us work each on their own route to make it faster, to make it with low latency, high throughput. And I think the DBFE research that we shared is a breakthrough in our opinion, and we're really excited about that future.
And we talk about value accrual quite a bit, and how, for instance, the stablecoin stack, we kind of see the issuers and the reserve managers on one side and the apps on the other, kind of this barbell approach as far as where the value ends up accruing. Similarly, right, we had kind of this thesis of like the fat app thesis or the fat protocol thesis. Maybe you guys saw that, and the value tends to kind of flow to either end of the spectrum. I'm curious, when it comes to the privacy stack, the FHEs, the ZKs, the cryptography protocols, and then the apps and the infrastructure on either side, where do you guys see value accruing? How should we think about this? Is it kind of just a service that is provided to the market? Everyone is able to get encryption, or is there another way to think about value accrual in the privacy space?
We're working a lot on value accrual. I think crypto has finally is finally maturing to the place where value accrual is very important. I actually still believe in the Fed protocol thesis. I just think that it needs to be refined a bit, and it's obviously not every protocol is able to extract value in a meaningful way. Not extract, but like receive its, let's say, a part of the value chain. so we're actually building like the economic model of our network as we speak, but like we are treating revenue as a first class citizen. And to be clear, we are treating network revenue like the goal. We are very much big believers in like being like this open source protocol layer that's very aligned with Ethereum, very open for everyone. And if you're part of our ecosystem, you will enjoy that value capture, but we are putting value capture from privacy as a first class citizen. The current model we are working with is this new idea called total value encrypted, or TVE, where it really needs to measure the amount of value that's like stored in the system, that's shielded. So anytime you shield the token, that adds up to the total value encrypted pool, and from that you're able to derive a fee. And also every time you obviously utilize and you transact with FHE components in there, then you're able to take a fee from that. Obviously, it needs to be reasonable, nothing substantial, but definitely something that justifies the level of cryptography and service that we provide to other chains.
It makes sense, and it's a question that I see circulating, on Twitter quite a bit, because, for instance, a lot of these financial institutions are coming on chain. They're tokenizing a lot of their products, and people are asking, like, the New York Stock Exchange said that they want to tokenize and they want to go 24/7 markets, and that sounds great because, like, they're tokenizing, right? They're bringing the U.S. equities market on chain, but then people ask themselves, how does this help my bags? Like, how does this help crypto, right? And I think people are skeptical because it's like, okay, well, this asset, maybe I have all my, my net worth in ETH, for instance, right? And, they tokenize US equities. Well, that asset class is not ETH, right? So that's one thing. And then the other thing is, well, if they launch the tokenized product on a private blockchain, or, a New York Stock Exchange permissioned blockchain with their own validator set, how does that really help, the broad open permissionless ecosystem? I think this is a question that's circulating in a lot of people's minds. How do you guys approach this? Open question to both of you guys.
Well, I think we actually have an advantage here because we're not trying to be a rollup or a chain, but we're actually trying to be an extension to any chain. So let's say the New York Stock Exchange decides to run like what kind of like Circle and others have been doing, or even Base. They're trying to run their own stock exchange on their own Ethereum fork. That might not be as great to Ethereum, which, by the way, I personally would not like because I'm a big Ethereum believer. But when it comes to Phoenix, is really the New York Stock Exchange equipped to developing their own privacy and FHE infrastructure? I mean, that's more like a service that they would want to appropriate into their own chain. We can do that in a very easy plug and play way. And then it's like, okay, like we're giving you a service like a SaaS provider. It makes sense that we and anyone who's holding our token will receive some fee from that. So I think we're a bit more neutral in that sense, but that makes it easier for us to actually take a fee from as a service provider from more chains, whatever where they go.
Same exact topic when we were still building Phoenix as an L2. And it became very clear from various reasons. The value accrual is one of them, but just the ability to bring the capabilities closer to the developers on the chains that they're at, is that the privacy as a service kind of architecture is really the right way from both reaching out to the broader ecosystem, but also have the ability to get total value accrual coming from multiple chains.
You're going out there, you're talking to market participants. JP Morgan's a big one. And, you're realizing what their problems are, and you're solving, for some of these use cases. And I think, this is what it takes to find product market fit. For so long, the crypto L2s were all just, hey, come build on us, another L2. You guys took a very different approach, and I think it's paying off as you guys are finding finding product market fit. So kudos on all the great work so far. And thank you for coming on the show. It's an absolute pleasure to see you both again. And looking forward to have you guys on again when, privacy comes around. Inevitably, it always does. Privacy goes out of favor and it always comes back. No surprise. Absolutely, guys.
Thanks, Rob.
All right. Yeah, we continue to see privacy as a narrative just continue to take hold. I think, as we kind of opened up the show, people are losing faith in fiat currencies, this whole debasement trade. Privacy is sort of a natural, knock-on effect of this as people sort of, separate and kind of take on their own sovereignty. Continue to find that in the financial ecosystem as well. And so no surprise that encrypted money is taking quite a hold, and we're continuing to see more and more of this. Our next guest, we're going to cycle over in just a bit. We're going to get Ben and Dave, DeFi Dave, from the Cap Money team. They're going to be on talking about stable coins, and I'd imagine that private stable coins are going to come up with them as well. And so, guys, don't go anywhere. We are going to be right back after this. And yeah, let's do a quick commercial break, and then we'll be right back. Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to Kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Havachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to Kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now Welcome back to another episode of Stabled Up, our premier weekly show covering the ins and outs of digital dollars, stablecoins, and the future of decentralized finance.
The show is made possible by Frax, and Frax is powering the financial engine of the internet, powering FRX USD and Genius compliant stablecoins. This is the stablecoin super cycle made possible by Frax. Now enjoy Stabled Up, our weekly stablecoin show. Beautiful. We're back. We've got Stabled Up. We've got Dave, and we've got Ben. And
Stabled up. That's right.
we are stabled up. That is our segment. We are powered by Frax, which is the sponsor of the segment. But we are fired up. And
I just wore my Frax sweatshirt today to work.
Let's go. And so, guys, you've got a stable drop coming, and so you've been building obviously for quite a long time. And so I want to get the latest because you guys have been on the show, friends of the show. And I think the last time you guys were on was a few months ago. So please give us the update on what has transpired over the last few months and catch us up on Stable Drop.
Yeah, I mean, we've been building, man. We've only been live for 5 months. We have around almost 500 million TVL, all organic. So none of these opaque side deals, just people liking yield, people liking safe DeFi. But maybe Dave, you can tell us a little bit more about like the stable drop. Is the stable drop, not just any.
Yeah, and yeah, it's not just any stable drop, but the stable drop. And I want to start with, we all know that token distributions are broken. We've seen time and time again, we've seen airdrops happen. People get the airdrops, they dump. We've seen the whole game with sex listings. Basically, from the get-go of tokens, they just have a bad start. And we want to completely revamp that playbook. And instead of giving tokens to people that were early users of our protocol, because let's be real, they were a huge part of our success. They're the ones that almost got us to 500 million. So we want to reward them properly. And at the same time, we want to eliminate uncertainty for them. So we decided, instead of giving them tokens, we're going to give them stable coins.
Yeah,
and that eliminates,
yeah, first time
and
ever
so that,
anybody gives stable coins.
yeah. And so that eliminates uncertainty for them, the early users. They don't have to play this game of chicken, like, oh, like, should I hold? Like, oh, is someone going to jump on me? None of that's going to happen. And this is especially good for, you know, the buyers and the participants in the ICO, because they don't have to worry about this overhang with the airdrop, because it's a stable drop. So we're really excited about this mechanism. We've seen a lot of great reaction to it online. A lot of builders that we respect, such as David from USD AI, the founder of Neutral. They've all actually are huge fans of the stable drop. And I think, you know, we're going to see a trend. This is the first stable drop, but I'm sure it won't be the last.
I think it's incredible that you guys are doing this. Like for the entire crypto economy and just community to think that we're like entitled to like the stake of some people's companies is first of all, it's just incredible. You don't see this in Web 2. You don't see this in legacy finance. Obviously, people try to game it, you know, with the airdrop. They want to, you know, give enough of the token supply to their community as to like not piss off their community, but not so much that they're giving away their own equity, you know, that they worked hard for. So it's not like you guys have to do this, you know, like you guys built this, you guys don't have to do this, but you're choosing to give, you know, something back to the community anyway. So give us some of the tokenomics around this, you know, like you guys have been live, you guys have been in mainnet. What made you decide like, okay, this is the time to do this is now, even after we're live, we want to do the stable drop? How much of the supply are you guys doing? How much is like the total value? Give us some of the numbers behind, you know, this activation.
Well, the goal here is all about following game theory, right? From the beginning, we have this fundamental belief that people will do whatever is best for them, right? And so that's why we're dividing, you know, users that are here for yield and users that are here for points. So from the beginning, people had to choose. Do you want to stake your CUSD and get yield, which is like 6-7%, or do you want to not stake it and you get points and you don't know what you're going to get, right? And now they find out that they get stable coins. And so why are we doing this? Well, you know, we want to make sure that at TGE, the only people that have the token are the people that paid for it, the people that all have the same cost basis. That's why it won't be a game of chicken of who sells first, who buys first, and, you know, how long do I have to wait for the airdrop people to dump. And so to answer your question about tokenomics, at TGE, 10% of the circulating supply will have been sold to these ICO participants. So people that participate in Uniswap CCA will get 10% of our token supply, and they will be the only guys holding our token at TGE. Separately, you have these points farmers and early users, and they're going to get stable coins. We can't say how much just yet because these campaigns still running, so we don't want to, you know, mess anything up by saying things too early. So after the campaign ends, that's when we're going to tell people how much we're airdropping.
Yeah, and I also want to add that for our ICO, we have the farmers. They're whitelisted. They're whitelisted for the ICO along with strategic partners. So we want to make sure that the people that are whitelisted are aligned with us and that are basically riding with us for the long term. And so we think our early users should get a piece of that along with our strategic partners.
Awesome. And so catch us up. Like the last 5 months, you guys have been live. I think you guys have been in the industry for a long time, but you know, you decided, look, we're going to start this stablecoin project, and Cap has done incredibly well in early days. People thought like, you know, they knew stablecoins were going to be a thing, but they thought like the days of issuing your own stablecoin were kind of gone. You know, like you guys came in and you saw, you know, incredible growth. How give us sort of a summary of how things have gone over the last, you know, the first 5 months of Cap.
Yeah, so this is my fifth project, I believe my fourth DeFi project. So I've been around for quite a while, and I have to say the execution by Cap, our team, and the community has been excellent, has been the best I've seen out of all the projects I've worked on. So as Ben said, we started 5 months ago in August. We had a great start. We had especially strong in our Pendle program, and I remember I wrote something about Pendle, and you guys had me on back in September. And then you can't really judge a protocol unless it faces adversity, unless there's like some huge conflict it has to overcome. And that happened. You had 1010, and you essentially had the whole stream finance debacle. And not only did we go down, but all stablecoins went down.
Well, we went down in TVL. Nothing happened.
TVL. In TVL. And we
Right.
went down in TVL. But you know what? We recovered, and we recovered stronger. And the deposits that came back were much stickier, from larger pools of capital than before. And so you had Infinify, EtherFi, Yuzu Money, all of them deposited in our protocol in this CUSD, stake CUSD portion, and playing with Pendle, that part of our protocol. So we came back, stronger from, all that stuff. And now we're nearing 500 million TVL. People, and the thing with Cap is we're all about market incentives. We're all about game theory. In the same way, we constructed our protocol, assuming that everybody's they're acting their best in their self-interest, whether they're users of holders of our stablecoin, operators borrowing, or delegators providing security. Everyone's acting in their self-interest, and we applied the same thing to our stable drop. We applied the same thing to our ICO, and we want to make sure that everybody is aligned, and everybody wins, and we want everybody to win. Yeah.
I love it. And remind people, I think you might have mentioned it earlier, but remind people what is the best way for them to get involved with Stable Drop?
Yeah, super easy. So we've had for the last 5 months this incentive program where people can perform certain activities. It's mostly using Pendle. Some people just mint CUSD, which is extremely easy. You put your stable coin of choice and you're already earning caps. That's coming to an end. And so whenever the program ends in 8 days, that's like when we stop giving out caps for that. And then we'll be giving the airdrop in February. But we have season 2. So, which is Homestead program. Is this new? It's actually the first time we announced it. We haven't announced it before. It's a little alpha for the Rollup people. It's another campaign. And so if you enjoy the first campaign, if you think it resulted in a good outcome for you, maybe try the next campaign. And thanks to the fact that we're not airdropping tokens, and this doesn't kickstart the same cycle of every other project. You airdrop, token goes to 0, then nobody wants to go on the next campaign. Here's very different. We're airdropping stable coins. So if we have the same ability to reward people in the second season the same way we rewarded them in the first.
Beautiful.
Yeah, and I also want to add, for the first month of Homestead, we'll be giving double the points, double the caps. And so the earlier you're in Homestead when that starts in 8 days, the better.
Okay, so this thing is going to start in 8 days. I love it. I love getting alpha like right here.
Yeah, first time. This is first time. This is for the roll-up.
Everyone, we can all react to this in real time. So in 8 days, we're going to launch Homestead. Everyone's going to be able to participate. Some of the ways are just simple activities that you can do on chain with Cap. You can mint CUSD. You can go on Pendle. You can do some Cap activities on there, and then you'll be earning points. And the earlier that you're in, the better. You'll be earning double points.
For the first month. Yeah.
For the first month, okay? And then all of this is going to lead to the stable drop, right? Are you guys going to do 2 separate ones, one before, one after for the second campaign?
We'll do one now. Yeah, we'll do one now for the first campaign.
Okay.
The second campaign will get an airdrop at the end of the Homestead program.
Beautiful. Okay. And so everyone is eligible. I'm sure everyone who participated in the first campaign is going to be quite happy.
Yeah, and I want to clarify that
Sure.
caps equals points equals caps. So we use them interchangeably here.
Yep, got it. And so you guys want to be earning caps and earning points, and that will ultimately earn you stable coins. And I'm gonna put a prediction out there and say that you guys are gonna get enormously more activity in the second campaign, because once people realize like they missed out on just money falling out of they would have wished that they participated in the first campaign, and they're gonna participate in the second one is my prediction.
Yeah, I mean, Dave and I are farmers. We know what people want. And
Yeah.
at the end of the day, you can give them your token, you can give it out like candy, but people just want yield. They want to make a buck. And so just give them that, right? Why do this whole workaround of throwing out a token?
Yeah. Guys, we've been putting together this thesis around neo finance. Maybe you've seen it. It's like we put out a market map. It's this idea that we're evolving on sort of both ends of the spectrum. The legacy finance world is evolving. A lot of the banks, especially if stablecoin, this is something I want to get your thoughts on too, maybe a little bit later. If Clarity Act goes through in the US, stablecoins are going to be able to provide yield to their end users. That's going to force, banks to innovate, provide more yield. Otherwise, you're going to see a lot of money leave traditional depository institutions and go into stable coins to get that yield. So we think that banks are going to be forced to innovate into something like a neobank. And then on the other side of the spectrum, a lot of these wallets, a lot of these projects with distribution, we think are going to be forced to sort of go away from the crypto native infrastructure slop that doesn't have product market fit or anything like that, and innovate as well and kind of meet those neobanks where they are and build out what we're calling neo finance. Stable coins are a really important piece of this. You've got the issuers, you got the stable coins themselves, and all of the apps that are releasing these stable coins. I'm curious to get your take on neo finance and this convergence of where we think the yield space is going. You mentioned USDAI. They're going into the credit world and providing credit to AI companies, passing a lot of that revenue back to stablecoin token holders in the form of yield. This is another thing that we think is going to be, really complementary to this new way of looking at things, this new era of crypto, which just feels a lot more grown up. It's not like the pool two token emissions anymore. It's more like real yield that's paid in the form of stable coins and yield coins. And we're doing it on chain. We've got really easy to use front ends and user experiences. And then it's powered by DeFi in the back end. And I'm just curious to get your reaction to the neo finance landscape that we see unfolding.
Yeah, it's happening, man. It's really happening. All these people are coming on chain. We realize that the traditional financial system doesn't work as well as DeFi, but it's actually, we're seeing real adoption. This is the reality that we built for. We built Cap because existing yield options on the dollar are way too risky, right? Aside from T-bills, which most people don't just want T-bill yield because it doesn't beat the inflation rate. Aside from that, the other yield options are very risky. And so we created this insured product for the dollar so that other neobanks can build on top of us, so that other applications can take advantage of this yield. And so you have big neobanks like EtherFi, for example. They've deposited way over $30 million from their earned product into Cap. Why? Because they focus on the distribution. We focus on the safe insured yield in the back end. And so we want we want 100, 1,000 neobanks to come. We want 100, 1,000 stablecoins to come. We'll be able to integrate all of them into our yield product.
Yeah.
Yeah.
Dave, go ahead. Yeah.
Yeah, and I definitely see a future where there's a convergence between these legacy community banks and what we're doing at the frontier, what we're doing on the edge on chain. I can see all these community, because think about it, there are thousands of community banks in the United States, and they're all looking for ways to earn yield. They could easily plug into our infrastructure and stuff that, like the Genius Act, especially the Clarity Act, that's going to give them guidelines, and that's ultimately going to give them the okay to go ahead and plug into us. And that's way more capital that is about to enter the system. So I'm really excited about that. And I'm ready to help these banks. I want to innovate with them.
Dave, I think you hit the nail on the head. This is the thesis, right? Is that these guys are going to innovate, and like you're saying, they can offer. And if you think about Coinbase, I know I'm jumping around here a little bit. Coinbase is offering this on the back end with Morpho, right? So you've got sort of this fintechy neobank like front end. You've got, look, I'm sorry, but people don't want self-custody. We've tried it. We know that they don't want seed phrases. They want a forgot password button. They want customer service, right? So we offer that to them on the front end, like a Coinbase. And then in the back end, they're providing something like 6, 7, 8% yield because we have all the capital efficiency, all the flows that you guys have. Great name, by the way, Cap. I mean, every time I think capital flows, capital efficiency, you guys are, right at the tip of my tongue. And so that in the background, I think is exactly where the space is headed. And you're right. Community banks, could be tapping into Cap and these yield sources in the background. They have the consumer trust, the end consumers, they trust these brands. They know that, they've been banking with these institutions for
Yeah, so
decades,
some
right?
of these banks have been around for over 100 years, especially in the Northeast.
Yeah.
And so they have established names, they're well known in their communities. But imagine if they're like upgraded and they're ready for the next stage of finance.
Yeah, that's
Yeah.
how a lot of these DeFi protocols end up receiving the trust because it's provided through these institutions that have a lot of trust. Ben?
Mhm.
Yeah, I wanted to touch upon that point about trust because so far what we've seen is that TradFi doesn't really trust us just yet to integrate us into those yield products. Instead, it has been DeFi trusting TradFi. So you'll see, Ethena integrating Biddle or, Morpho adding RWA assets as collateral. But do you really see these TradFi guys integrating their smart contracts into the back end of their system? Not yet. And so that's the challenge, and that's what we're trying to do, right? So we have the likes of Susquehanna, we have the likes of Flow Traders, not going to Apollo, not going to Citibank. Instead, they're coming to us for credit, right? You have people that like neobanks, like EtherFi, not going to Wisdom Tree to get their yield, not going to Fidelity to get their yield. They're going to Cap. And so I think if we are able, the challenge is going to be, can you build code that's good enough? Right now we're in this space where we have a lot of startups building managed products that rely on trusting teams. But I feel like if you can build products that are good enough and that lower the trust assumptions enough, you will have this adoption. But that's the challenge that we're focused on particularly.
I like to call it the Uno reverse card. So instead of
Yeah.
us going, projects and protocols going off chain, basically becoming wrappers, it's no, the institutions, TradFi, they're coming on chain and they're using us, and they're actually participating in on chain pools of capital for their bottom line, and they're doing that with Cap. They're actually borrowing, they're actively using Cap, and I think that speaks volumes.
What are the knock-on effects here? Like, walk us through what are some of the institutional use cases that you guys are currently seeing, and then like what happens next?
Yeah, there's two things. One of them, we closed a deal with Wisdom Tree. So now their users, they have a lot of users that pension funds, family offices, etc., that earn T-bill yield with their money market funds. But a lot of them are not happy with that because they want to earn a little bit more. And so what we've done with them is that we convince them to hook up their product to Cap. So if you're an existing user of Wisdom Tree's money market funds and you're earning T-bill yield, now you can choose to redirect those funds into Cap through a permission flow. And so that's something that we're very interested in. And I see a lot of products trying to connect their yield products to TradFi, but it's difficult to do. And then the other one is obviously what Dave mentioned. Getting these regulated financial institutions to actually use these products. And we've seen it a little bit with what's that French bank, Societe Generale, right? That they're using Morpho and they working with MEV Capital to do their stable coin. So we see some of these, but it's still very, very early.
We're still early in something, boys. So
And people have been trying to understand how they can get exposure to stable coins because I think everyone sees this. Like, we have Secretary Bessent saying there's going to be trillions of dollars of stable coins, and they're wondering, like, how can I get exposure to this? How can I bet on this piece, this segment of the market, doing particularly well? I mean, is it just use Cap, like just farm stables using Cap
What
and
can I
get
say? What can I say?
points?
Well, here's the thing. There's two ways to get a project's token, right? It's you buy it off the market after they TGE, or you farm for the airdrop. We've been in crypto long enough. What's better, to get money or to buy it? And so I think you know my answer, but I have to be careful with how I explain it.
it's all about skin in the game.
Oh yeah, oh yeah. So you guys don't have a token yet, right?
No, we're
No.
going to have a token sometime this year. I can't say when, and yeah, it will be called Cap, which is
Okay.
very exciting. And we have a lot of interesting ways in which we're going to integrate it into Cap. But I don't want to get in trouble with marketing by getting ahead of things.
You guys already released quite a bit of alpha right here, right? On this show. We're definitely going to clip Homestead and make sure that people know about Homestead because I really do believe that we're going to see a lot more people and funds pour in to the season 2 campaign because they don't know what they're missing.
Yeah.
Guys, I mean, close us out here. What else are we seeing on the stablecoin front? Actually, I do have something that I want to get your take on. we released this Neo Finance market map. One of the main components of this is stable coins. And so we had Chuck from he runs a podcast as well. And so Chuck was talking about how in stable coins we got this barbell. On one hand, we've got stablecoin apps, and then on the other hand, we've got these treasury reserve managers, and in the middle, you've got issuers. And we were kind of workshopping like where value accrues in the stablecoin stack. And so I want to get your take on this. Essentially, in my opinion, the issuer game is sort of a game that's been won. Like, you've got the major issuers. I don't see a long tail of issuers coming in and disrupting, the big few that are up there. On the other hand, you've got, the stablecoin apps like Klarna's going and they're releasing their own stablecoin. You've got even teams that have major distribution. I could see an Uber stablecoin. I could see an Airbnb stablecoin, right? These are companies with distribution, but they would probably not issue. They'd probably use one of these, stable coin as a service providers and this treasury management in the background. Curious to get your take on this stablecoin stack. Do you guys also see it as a barbell approach? You've got a lot of these stablecoin apps on one side. There can be a lot of apps. Really, anyone with distribution can do quite well on that front. And then on the other side, you've got sort of this treasury management side, as close to bare metal as possible. That's where some more of the value will accrue. Is this how you guys see value accrual in stablecoins, or do you think there's a different mental framework through which we should come to understand specifically value accrual in stablecoins?
I personally, what I don't want to be doing is stablecoins as a service, like T-bill stablecoins as a service, or making my own T-bill stablecoin. Why? Because everybody and their grandmother is going to come out with a T-bill stablecoin. You said it, Uber, Airbnb, Klarna, everyone's coming out with their own stablecoin, and it's completely undifferentiated, right? Why would you use those stablecoins? Well, because you're already a user of those platforms. And so if you have just a stablecoin with no home, why would anybody use it? I'm not sure. Cap, at the beginning, we knew this was going to happen. And that's why we just aggregate all these. It doesn't matter whether your stablecoin is from Singapore or South Africa or Florida, we can integrate it to give it yield. To answer your question, I think we will see a lot of these institutions make their own stablecoins, maybe with help from folks like Paxos or others that can automate the legal part for them. And then you'll have a lot of applications. Cap, we want to be infrastructure, right? We don't want to build on top of these stable coins in a user-facing way. Like we don't want to have like a card or some sort of savings app. That's not really for us. Instead, we want to be this infrastructure that connects all these different stable coins that gives them value beyond the mode of their issuers, beyond just, this is a cool stable coin because Klarna made it. It's actually even better because now I can put it in Cap and earn better yield than Klarna would give me otherwise. Dave, I don't know if I missed it.
Yeah, no, you hit the nail on the head. My framework for viewing stablecoins is you have distribution and you have infrastructure. And most stablecoins, they focus on distribution, and your distribution is only as strong as your network effect. And Benjamin and I know that we're not going to beat that game at all. And so when it comes to infrastructure, though, there's still innovation to be done. There has been some progress over the years, but I think Cap is really just an order of magnitude more evolution in this
super
yield
unbiased,
engine.
of course.
Yeah, super unbiased at all. But we really created this credit engine that can scale to the tens of billions, honestly. And I'm and this is just the early stages. It's just the beginning, and people are getting on board. So come join us.
Dave, like you said, you guys have been part of several projects in the past that didn't really stick. What do you think about? What is it about Cap that really has caused it to be like this? This feels like the one.
Yeah, I think first and foremost, it's the team. A project is nothing without the team. I previously have been part of Frax, Dinero Redacted, Gelato, a bunch of different things. Benjamin, founder of QDAO. We have all the beefy devs, and they've held billions in their smart contracts before. So we've all been around, and that experience goes a long way. And how many people can say they have collectively 25 plus years experience in DeFi? Second, it's just the idea. It works. It just hits, and we are seeing it work in real time. And it's just a matter of time until it scales. So it's the team, it's the product, and of course, it's the community. People are excited about it. not only do we make people aware, but people are using it, people are talking about it, and you're just seeing it catch fire. And I think what I love about Cap is it's a slow burn. It's not like oh, like it's like in your face like right away. It's like no, like people are catching on, people are learning about it, people are understanding it. But now I think with stuff that we're doing like the stable jock, it's gonna bring way more attention to us and what we're doing. And like like Ben said at the beginning, we're almost at 500 million. Soon a billion.
I would add one more thing is who's using this, right? We have institutions today that are using us maybe to get credit. Instead of going to Citibank, they're going to us. Like these are large regulated institutions. I think the collective AUM of our operators is over $2 trillion. So this hasn't happened before. We do not see Susquehanna borrowing from Aave, right? We do not see flow traders using Morpho or using other DeFi protocols that I think are amazing and I use myself. And so that's really what makes me think this is different, right? Like, for example, Wisdom Tree or Franklin Templeton, they've never whitelisted a complex DeFi protocol for usage ever before. They've whitelisted stablecoins to be their backing, but they've never whitelisted their money market funds to be using complex DeFi operations before. And so all these little things, these institutions that are slow and they're risk averse, if they really want to participate in Cap, that tells you there's something different is going on here.
Yeah, well said. Well said. And these are success stories that end up scaling to even greater financial institutions. And I think, you guys serve as a model because it would be great for some of these institutions to go into Morpho, go into Aave, right? And get, we know that these are reputable, DeFi projects and on-chain companies. And it's incredible that you guys are the foray. Like you guys are the first sort of portal through which they're viewing DeFi on-chain. So, with great power comes great responsibility, right? Don't fuck it up for the rest of us, guys. I know you're not going to. You guys are doing an incredible job. It's really, really great to see.
Well, I have to say we have a CTO and a group of devs that built Beefy Finance, arguably the most used yield protocol in DeFi that has never been hacked, right? It's been in every chain known to man, and they're extremely paranoid and they're extremely conservative. So even if you don't trust Dave and I, the devs are not going to let anything happen. I'm pretty confident in them.
Yeah. The engineering, the code speaks for itself. Everyone can go, they can check it out, do their own research. But I think you guys are doing an incredible job. And congrats on even thinking up the stable drop concept. I know people are gonna love it, and it's gonna garner a lot of attention. It really feels like you guys are on the the beginning of something really, really cool here. And you've come a long way. Like you said, 500 million already in the vault. So like it's not like this is just a flash in the pan. It's a slow burn, and I think you guys are very much on the right track. So thank you for coming on and sharing it with us, and would love to have you guys on again soon, anytime.
Thank you so much, Robbie.
Yeah, absolutely. See you guys soon. Cheers, guys.
See ya.
All right. That's it. That's our show. Guys, thank you so much. Yeah, we've got Ben and Dave are still behind the scenes. But yeah, they're always great. They're friends of the show. We've seen them around at conferences and they've been in the space a long time. Like you heard Ben say at Beefy, Dave was at Frax, and this has been a great segment presented by our friends over at Frax who have tremendous things coming on line as well. You heard Sam a couple of weeks ago talk about some of the partnerships. And then I believe just last week, there was an announcement that 50 million is going to be coming into the protocol. They were snubbed from our payments infrastructure segment of the market map, which was our mistake. But Frax is doing great. Cap is doing great. This entire category is something that we believe in. And we really believe that, as neo-financial institutions are coming more on chain, their first impression is through stable coins. So it's no surprise that these guys at Frax and Cap are doing great. And then I do believe that it ends up with this wealth effect, ends up spilling over into some of the more expressive DeFi applications that are out there on chain. So guys, check out Homestead. Sounds like a great campaign. You guys aren't going to want to miss it. All right. That's it. Great show, guys. We will see you again tomorrow. We've got near intense day tomorrow. Don't miss it. And yeah, it's a great show. Signing off. Cheers.